Let's get started in just 1 second as soon as this thing stops spinning. And I think we are live. Yay. All right, let's do this. So this is what we do every time in this channel. What we do is we take deals that are already listed and ready to go just on Zillow so that everybody can realtor.com. And what we do is we analyze them. We go ahead and do the location analysis, then we do the property analysis for cash flow. And then if you want, you can make an offer. Okay, so we do a lot of the heavy lifting for you right here. So here's the thing. This is one of the things. St. Louis is one of my favorite, but you need to know really which neighborhoods to get into, right? So this is the 3-step process, right? Location analysis, property analysis, that is the cash flow analysis, and then making the offer, right? So a lot of our property analysis in real estate investment today, it just starts directly at property, but it shouldn't, because the location is the most important part. So if you know location analysis, then you can treat the entire USA as your backyard, right? So that's what we're gonna do. So this is this one Kossuth 4843 Kossuth Avenue. What we're gonna do is take a quick look. Is It doesn't look like it needs a lot of work. It seems like it's mostly a ready to go property. So take a look. Let's see what the listing says. Great opportunity for house hack, cash flowing, flex, both of them. 2 good side bedrooms. Outside your space, find a spacious yard with a detached garage out back. Its property has been well maintained and is good condition overall. The duplex brought in 1,700 per month when fully occupied, with the potential to bring in 1,800 plus. We will decide that. So this is a duplex, so 2 bedrooms, 1 bath, and 2,100 square foot. So each unit is roughly 1,050 square foot. That will come in handy later on. So first thing we do is do location analysis. So this is where we go to where to invest address evaluator. Go to, if you don't have the access to that, just go to where to invest.io, and I'm going to drop that in the chat. Where to invest.io, and get yourself a little subscription. It's just $50. The starter subscription is just $50 for you to try out. So what we do is wait. Control V in there, it finds it, you select it, and then there you go. And voila. So first of all, what was Penrose neighborhood, St. Louis City, metro area is St. Louis, Missouri, and Illinois. It goes also a little bit into Illinois. As you can see, this is the metro area and the state of Missouri. So here's the thing. We follow the secrets method, SECRRETS, and you go from left to right, and we decide if the property passes each gate or not. So we are right now on the size gate. So in the size gate, what you want to make sure is that the metro area is big enough, and then the neighborhood is big enough. And by big enough, I mean in population. So it's a secondary metro area, 2 to 4 million. That's big enough. Roughly 3 million people, or just under 3 million people, 2.813 in St. Louis. That's a good thing. Next, we're going to see the neighborhood of Penrose, which is 4899, nearly 4,900 people in this neighborhood, which is good. And it is 4899 neighborhood. So it passes the size gates. On to the next. economic, that your property should not be dependent upon whether that uh, industry is doing well or not, right? So we're going to go and take a look. And there you go. This is the economic diversity tab. So 14.88% healthcare. So anything more than 25% in the neighborhood or the metro area is an issue unless it's education or healthcare. So in this case, in the metro area, it's actually the metro area is what you really care about, because and there's a lot of industries, healthcare, manufacturing, retail, education, all of those ones that are employing the inhabitants. So we are good on that, right? So this passes the economic diversity tab. The neighborhood has 26.29% in the healthcare, which is not bad at all, right? Next, you're gonna go ahead and look at crime. Very important. So, okay. So crime, there's two kinds of major crime: personal crime and property crime. So personal crime includes murder, rape, robbery, and assault. And the property crime includes burglary, larceny, and motor vehicle crimes. And you gotta evaluate for each one of them. The So this is what we do. This is the where the neighborhood falls. Basically, 46 out of 100, which is fine. Relative to, so, and this is what the locals think. This is Pedro's neighborhood, St. Louis, and this is St. Louis metro area. So if you can see that in murder, this is just green. This is 49 is the St. Louis metro area average, and this is I'm going to turn it a little bit higher so that you can see. Uh, and this is the St. Louis. So this is less than the average of the metro area. So good. Next one, a rape. This is 28%, and this is way less than that. So Penrose is good for this crime. Next one, robbery. This and this, green, green, go. Assault. It's in the yellow, which in a rental neighborhood we are kind of fine with. Okay. So 1 or 2 out of 4 we can live with in either one of them, right? So this is a yellow. Yellow is fine; it's a go always. But this is a red. Risk of assault is a little bit higher, but it is not significantly higher. So that's still a go. Property crime. We almost never say no to a property because of property crime, unless it's like in the red nationally, in which case don't. Okay, but locally it's fine. But in this case, you can see burglary is fine, larceny is still fine, and motor vehicle crime is also fine, right? And this is the total crime, which includes a lot of other city and stuff. You can just kind of zoom hover around, and this is okay. 58 Penrose, this is 61 Greaterville, Kingsway East. So this way you can just get a visual idea of what are the good neighborhoods in the metro area. So wonderful. So crime, it passes. Then residents who lives there, right? Kind of important. There it is, 4843 Gossett Avenue. And if you remember the listing, which I should go back to the listing, Gossett Avenue listing, 4 bedrooms, 2 baths. So 2 bedroom, 1 bath unit. So we're gonna say search property type. Sorry, we're gonna say multifamily. It actually found it automatically that it is multifamily 2 bedroom, 1 bath. That's 980 is the supposed value for that. And 1100 multifamily, all of them are 875, 825, 825, 700. So yeah, no, I would not say this is 980. I would go for roughly 900, which is what the listing is claiming, with the potential to bring in 1800 plus. So 1800. So I'll go with 900 at the moment. So just remember the 900 is the expected rent. So the population growth, we want to see the metro area actually. So you click on the metro area and say, okay, what is going on the metro area? Okay, so the population is going up, slightly up in the next 5 years, in the last 10, 15. So we generally care about last 5 years and the next 5 years. Okay. So this is fine, it's going up and this is going up. So you go back to the neighborhood and see what's going on in the neighborhood because that's what's important. Okay, so these are all both 2 bedroom, 1 bath units. So your most likely inhabitants of that is going to be a couple or a couple with 1 kid, right? So it's going to be, we want to see how many people would actually qualify or would qualify, not qualify, but would fit the units that we have, right? So the units that you have are 2, 1, and they're couples. So you go to the living arrangement and see families without children. This is still families without children and families with children. So this is the families, families with 1 or 2 kids, 3 kids, whatever that is. This is families without children. So this is couples. They have gone together and formed a household, but they are not quite ready level, whatever that is. They've not, and this is singles, non-families without children, right? So if you look at the size, you will see that that's roughly 5,000 people in the neighborhood, and out of that, 23% are so 5,000 multiplied by 0.23. That's 1150 that will actually fit. That's decent enough number of people that would want to live your units. So that's good. So this answers the questions: how many people are there that would like to? There needs to be a subset of people that would want to live in your property. The next one is, can they afford it? Right? Are they making enough that they can afford it? So because we are looking at couples, we will look at family income. If we're looking at singles, we'll look at individual income. So our rents are 900. So that's the monthly rents multiplied by 12. That's 10800, right? That's their yearly. And you want them to be making at least 3 times. So multiply by 3, and that is 32400. So how many people in here can afford the 32400? So these people can't. So this is the family income, and the graph shows 15 to 25K. They can't afford it. They are not good tenants for you. This is not under 15K. They would not be able to afford your rent. But out of this, also roughly about maybe 5% can afford your rent right here, right? 25 to 35K. 30, the income target that you're shooting for is 30 to 4, right? But all these people can easily afford your rent. So 5 plus 8 is 13, and roughly 60, 68, 69. So roughly 72% of them can afford your rent, which is good. There's not a single age group. Okay. Most of them take a car to work, so you need at least 4 parking spaces. This is something to keep in mind. Is there a gender? Okay, so this is a 57% female to male, and they're all African Americans. So if you're staging it or if you're choosing a property manager, you need to you're probably going to get an African American female or male professional with some college, some high school, or some high school degree, uh, who is in the service industry or a professional. That's your property exists to serve these people. Okay, so next is real estate. What other kind of real estate exists there? So there it is, the quadplexes. What if you wanted to see what these are? You can just click on this. So once you buy your first one, you can just go and tell your property manager to reach out to those guys to see if they're willing to sell it to you directly. Okay, and there's a lot of per unit, so 50 to 60K or 40 to 50K right here. So it's a middle of the road deal in the neighborhood. But if you look at the metro area, this is an absolute deal. So Penrose is a safe neighborhood with good deals available out there. Something to keep in mind. Okay. And there's a lot of older properties here. This is the age of housing. If you see in the entire metro area, there's only 14% that are pre 1940. But in Penrose, there is a lot of older properties, which makes it a good investor friendly neighborhood because that's where we kind of do our magic. There are a lot of investor owned versus homeowner owned in the neighborhood, and a lot of them are free and clear. 54% are free and clear. So you probably should ask for some sort of financing. Team building, these are all the people that can help you: realtors, contractors, property managers, investment property lenders, hard money lenders, right? So if you want to do that, and then the swings and trends, where is the market going? There's going to be less households. So that is something. So next, we want to see occupied house. So you want to see 50 to 60K. Click on that, see what's going on in that unit range, right? So now we want to see whether or not and I'm going to show you how to use that. So we always say it's a duplex, but we just put like property address. What was the address? 4843 Cosset Avenue. We just gonna put purchase price is 100,000. We have cost. I'm gonna put 0 for now. As and when we figure out what's going on with the property, we go and come back to the spreadsheet and redo the numbers. But right now, I'm going to say that it doesn't need any work. It's good to go. So these are the hard money. Loan to cost is 3% if you're doing hard money, but we almost never, we just do cash flow. So this is the mortgage interest rate. This is for a DSCR loan, right? So DSCR loan is a loan. So if you go to invest and go to the team building people and ask for a DSCR loan, okay? We'll go back to the spreadsheet, and these are the rates available right now. And I am taping this in April, a second week, 2025. So these are the rates available. But as and when you evaluate, you gotta add another one. And the acquisition costs, so that would include the property insurance for the first year, inspection cost, appraisal cost, transfer taxes, title insurance, recording fees, closing fees. So all this money that you have to spend to actually purchase the property, we have to put it in there, okay? So so now we put in the monthly unit rents, 900, and that's it, the 2 units. Don't put anything else. We always put a vacancy factor, even if you don't have any vacancy. Generally, if you don't have any vacancy and people are always lining up to buy a property or rent your property all the time, that generally means that you're not charging enough rents, okay? But it's just a duplex, so it's not that big of a deal. So what are the real estate taxes? Where do I find the taxes? It's right here. Go to the listing. And Zillow does a really good job of kind of giving you an idea. So if you just go to the payment calculator. So principal and interest is going to be 543. Mortgage insurance, they're assuming that there's no, but property taxes, this is $83 a month, right? At about 1% a year. That they kind of go to the, we go and take out our handy dandy calculator and say 83 multiplied by 12, and that's 996. 996. 6. Property insurance, they also say that in Zillow, which I love. Home insurance is 30, and plug in 396. Now, these you could get, but when you do, don't forget to come back and change it, okay? But okay, the next one is property management and maintenance. So what you're going to do is 900 multiplied by 2. That's your monthly rents. Multiplied by 12. That's your yearly rents of the property, right? 21.6. and 10% of that, so 2160, that's your rent for the year divided by 10. 5% is what we put for the repairs and maintenance. 1080. And then you say water, sewer, if there is something related. But this is literally, and then if you have landscaping, so if you know that the property snows, then you go ahead and add something else, and then you add reserve. This is something that people forget all the time, and this is what lands them into trouble. So what you do is you add 5% for reserves, as just in case. As the property gets older, things are going to break, right? So you need to have a nice little slush account for every property, that when something breaks, you have something, right? So you kind of put this away, and your insurance, your cash flow should include that. So if there's something that you really, so what are the major expenses on a property? Taxes, insurance, maintenance, management, utilities, and reserves. And there they are: taxes, insurance, management, maintenance, utilities, and reserves. Timur. TIMMUR. Just remember that. I'm going to drop it in the chat right now. R. So now just go to the financing purchase. So you need to have 31,390 to buy this property. So this makes 21,600 every month, or every year rather. And out of that vacancy, we put 5% away. If you don't have any vacancy, and if you make that, great, that's in your pocket. But we have to calculate for that, right? So expected annual rental income is about 20,520. Out of that, you subtract all these ones, right? That is 6727, and your net operating income is 13,793, and then you pay the mortgage out of that, and you have 76453 left over. So you put down 31,390, and you're getting back 7,653. That is 24.4% cash on cash return. So that's your investment, because you're leveraging it through a loan. You have a nearly 25% return on investment, and this is not even that good. But so this is how you calculate. You go and calculate the location first. You go to where-to-invest.io, get yourself a subscription. If you want this spreadsheet, drop the spreadsheet. We sell it for just about $60, and I will let you know how to do that. So thank you so much. And if you have any questions about, or if you want a particular address that you want me to analyze, let me know. The address does need to be in the USA, and we will see you tomorrow. Bye. I don't know how to stop my end stream. So yes, go to where-to-invest.io if you have any questions. And get yourself the basic subscription for this data that we looked at. Okay, I'll see you tomorrow. Bye.